Money printing in India is not as simple as just producing more notes whenever needed. It is a carefully controlled process, mainly handled by the Reserve Bank of India, RBI, with some involvement from the government. The Reserve Bank of India, headquartered in Mumbai, manages currency in India. The bank's additional responsibilities include regulating the country's credit system and using monetary policy to maintain financial stability. The Indian government determines what denominations are produced, while the Reserve Bank of India works closely with the government to ensure effective currency management and prevent fraud. Before 1934, the government of India was responsible for printing money. However, under the Reserve Bank of India Act of 1934, the RBI was given authority over currency management. Section 22 of the Act specifically grants the RBI the authority to issue currency notes. The Reserve Bank of India operates printing facilities in Dewas, Nasik, Mysuru, and Salboni. Although the Reserve Bank of India has the power to print Indian currency, the government still has the final say on many of its actions. For example, the government decides which denominations are printed and determines the design of banknotes, including their security features. The RBI can print currency notes up to 2,000. However, if higher denominations are required, the government must amend the Reserve Bank of India Act. Each year, the RBI estimates the demand for banknotes and submits a proposal that must be approved by government officials before printing begins. In making these decisions, the government relies heavily on the advice of senior RBI officials. In a major move on November 8, 2016, the Indian government announced the withdrawal of 500 and 1,000 notes from circulation to curb counterfeiting and corruption. Following the announcement, holders of these notes were allowed to exchange them at banks. However, by December 2016, the exchange process was discontinued. New 500 and 2,000 notes were introduced as replacements. Currently, the following denominations are in circulation: 5, 10, 20, 50, 100, 500, and 2,000. Coins in circulation include 50 paise and 1, Y2, 5, and 10. While the Reserve Bank of India prints currency notes, the Government of India is responsible for minting coins. Coins are produced at 4 mints: Alipur in South Kolkata, Saifabad in Hyderabad, Cherlapalli in Hyderabad, Noida in Uttar Pradesh. Although the government mints the coins, the Reserve Bank of India distributes them into circulation. Beyond printing money, the Reserve Bank of India has several key responsibilities aimed at maintaining the stability of the Indian financial system. The RBI formulates and implements monetary policy, and it supervises and regulates banks across the country. The Reserve Bank reviews its monetary policy strategy every 6 months, and in some cases, quarterly, meaning every 3 months. The main objectives of the RBI's monetary policy are to control inflation, regulate bank credit, and manage interest rates. India's banking system includes public, private, foreign, cooperative, and regional rural banks. The RBI oversees the operations of all these institutions to ensure overall financial stability. The Reserve Bank of India is responsible for printing and managing currency in India. The Indian government regulates currency denominations and designs, and it is also responsible for minting coins. The RBI can print notes up to 2,000, while higher denominations require government approval. In addition, the RBI plays a crucial role in issuing monetary policy and maintaining financial stability through the supervision of banks. The government's decision in 2016 to withdraw 500 and over 1,000 notes highlights its strong influence over currency circulation.